Good. Oh, let me see it. Why is it not working? Okay.
Hey. Welcome to the show, ladies and gentlemen. Aram, I try to get AR to draw you guys over here, but I'm going to kind of switch up the guys on top here. But basically, this is my first live show back in a while. I was ill, and then Nikita rugged InfoFi on X. So, like I said, like there's no point in doing live shows. I was doing them a lot for the mindshare farming between us. And then I kind of decided that, this year the focus is like I want to put my money where my mouth is, and that is in the real world asset space, in the financial services space. Like no more gimmicks, no more, pre-TGE projects that are promising something and then disappearing once the token is launched, but rather like, Aram and I were talking about some of the numbers that are associated with Canton, and this is hundreds of millions of dollars.
Billions.
This is trillions of dollars. This is a huge potential. This is very much a whole new blood. I mean, like one of the narratives is that it sort of feels like the DJs are just buying from each other, and there's just like no new blood coming into the market. So this is new blood coming into the market. The people that Melvis is talking to are not the same 5 crypto bros that are invest in each other's projects and launch different types of coins. So that's why I'm very excited to have you on. It's also incredible. It's also an interesting time as the Chinese curse goes. You're in Hong Kong, and they'll tell you that, mate, the one curse is, mate, you live in interesting times, and these are interesting times because we have a historic divergence between metals, between gold, between silver and Bitcoin price, obviously not doing us happy. If you're a bull, if you're a bear, or you're sitting on some stable coin, you're probably popping the champagne right now because this is deep value. And I want to kind of start off with that. Like personally, I'm hodling. I'm kind of using this time to rebuild my conviction in Bitcoin and to take better care of my custody. Honestly, like I'm thinking about my kids and my grandkids. Like I'm trying to secure BTC as if one of them is worth $1 million, $10 million. So that's, I think, what the bear markets are for. Obviously, for learning skills, upskilling, and I'm kind of, not really getting carried away. Like obviously, it's not, fear and greed index is at 9, 5, even lower, and the market is down. Obviously, that has an impact on like my day to day, my mental health. Like, I'm counting noodles instead of looking at the Pateks. So that is definitely like part of the equation. But like those of us who have been here long enough know what deep value means, know what this part of the market means. So I want to, without further ado, introduce the dais over here and just kind of get a vibe check from you guys. It's been a while since we caught up, and by a while I mean 40% BTC down drop. So, how are you guys feeling? How's it like? And I'm especially interested to hear from Melvis because he just landed in Hong Kong for consensus. Like, what's the feeling on the streets right now? The people, your initial reaction from the first day in Hong Kong, like, is there like a funeral vibe, or are people still bullish, still business focused, still looking forward?
I think so. At the end of the day, I think right now it's more like business focused in the sense that in the past couple of years, many things that are happening was mostly hype driven. And then with the past year and a half, they've been more of a strong core focus, coming in around the core utilities of what you can see and have across different crypto networks. And so this huge downturn that we're seeing, and generally it happens time and time again, but the question is whether you have some dry powder left in order to take advantage of these time periods instead of getting fully liquidated and then having to start over, or just fully liquidated and so you just leave the industry completed. And then it also goes to show that across the board in other industries as well, in other sectors, those are also getting hit. As you mentioned earlier, across the equities markets, the commodities markets, and the likes, they're also getting impacted. So this all comes down to the fact that each person needs to invest with strong core risk management, and then also invest what you can afford to lose, right? Depending on how far into the risk curve you're looking to do. We're looking to get into. So overall, the conference is still getting freshly started. People are still arriving, but the implications of what's happened over the past few weeks are very real, and the down period hasn't fully set in yet. So who knows? So it all comes down to basically being able to stomach the amount of risk that you're looking to take or you have been taking. And if you are getting impacted now, definitely learn from what has occurred previously in order to position yourself for what's coming up next. But I would say in terms of crypto assets itself, already we've been seeing, at least for more of the sophisticated people, looking to evaluate crypto not just on the social value or the hype cycles that come through, but then more so taking into account the value around utility and also the financial value these tokens can provide. And Canton is one that has strong core real value, and most people have also seen like hype as one of the only few assets that are actually doing well in this time period. But happy to jump into more of that later on. But yeah, it's very sad out there for a lot of people. Not the best time.
Yeah, I hear what you say. Like for me, never put in more than you can afford to lose. I say that about fiat currency. Never hold more fiat currency than you can afford to lose, because hyperinflation, like, I go out and I buy a piece of steak or a hamburger, or like, what I want to do? I want to invest in my child's kindergarten. Like I want to buy a tokenized share in that, because that chick raises the prices 20%, 30% annually, that you can make some good compounding gains. So I feel like, this is a great time to kind of, take advantage. If you have dry powder, and people ask me now, should I buy, should I pay? I say to them, if Bitcoin, isn't a big chunk of your portfolio, then don't just, don't look at this, use this as a catalyst for setting a plan forward. Like make this part of your financial discipline. I make money, I earn some money, I spend some money, and I save some money, and part of that I throw into BTC. I don't look at it for the next 10 years.
And that's the thing. Dollar cost averaging is actually partly the best thing to do around these any industries. Just like slowly, just dollar cost average versus coming in all at once with a big chunk and then eventually get impacted. But DCA is probably one of the best things, depending on how sophisticated you are. I'd say.
Yeah,
Definitely.
And one more thing that I want to add, we talked about the markets crashing. Not every crypto is performing the same way. And I was just looking at the chart. In the last 30 days, Bitcoin is down 24%. And in the last 30 days, the Canton coin, the CC, it's up almost 24%. So it's not all the same. Just kind of wanted to bring this up. And then I'm going to ask you a couple of things about the CC token, but just kind of wanted to throw this in here.
That's crazy. I think it's because, I've been thinking about it, and after this, I want to get Anton's take as well about, like, where we are in the cycle, because a lot of the coins, crypto is highly correlated asset class. So if someone tells me, like, I remember the first thing I wanted to do when I joined crypto is, like, in 2017, there should be an index of all the cryptos, top 20 weighted index, like you have S&P, right? And after a second, I realized, like, a little bit of stats teaches you that the diversification advantage is only when there's uncorrelated assets, and then the specific risk sort of evens out across the board. But when you have Bitcoin, Ethereum, Solana, like, they all betas on Bitcoin, then it doesn't, it's not like, you can't really have delta neutral strategies. You can't, you'd be very limited in what you can do. Whereas over here, you have another asset class, like taking a bet on Canton is taking a bet on precious metals and commodities and private credit and JP Morgan coming on chain and BlackRock coming on chain. It's a different fundamentals altogether. But Anton, my friend, I've been following you closely about the reasons for the crash. I've been trying to decipher it myself. What's your take on what happened last Thursday? And, like, are we in for more pain? Like, how are you feeling about this?
Yeah. So first, great to be with dear friends on the live stream, and really great to see you guys. And I'm sure we'll have a blast. And look, I mean, both Melvis actually and Aram said it. These are such different investments that we're discussing now. Crypto is very much different than commodities, gold and silver, is very much different than equities. It's very much different. I also wanted to add the real estate. Imagine, telling people who invest into real estate saying, you should be comfortable losing it all. I mean, these are different risk profiles, right? But we can touch upon that later. I want to answer your question. So what I can tell you first is that the interest in the crypto markets and trying to understand what's happening, from what I see, is like probably at an all-time high, right? Like everybody wants to understand, why are we up or down, or are we going up or down, and kind of what's happening in the markets lately. And I talk to a lot of people trying to get the right insights, but also looking at the data. And you basically have like three factors that people agree on why the crypto markets is down. And let me give you a little bit So first one is very much political one. So even though the political situation globally, but in particular in US, which is the most important market for crypto, but in general, has very much changed since, the new administration, many feel there was things done not in the best way, that things could have been done a lot better. And I think I'm hinting at it, but I think we all know here kind of what I'm referring to. But this political aspect is, the first one. The second one is geopolitics. There's so much volatility in the world now, at the moment. Things change, from day to day. And that is impacting not only crypto markets, but the global markets in general. And then there are two very specific crypto things that I have identified. First one is that there was a lot of leverage that was built up in the crypto industry, in the crypto ecosystem in the last couple of months. And that kind of snapped on October 10th, right? We had these big, liquidations, big price moves. You can blame whoever you want why that happened. I think this is not constructive. Melvis talked about infrastructure, and we can always focus about building a better, resilient infrastructure. But this is definitely something that identifies things. And the last one, then maybe I can, give the word back to the guys. There's a big fear that crypto entity blew up in the back, and there are ripple effects, in the markets felt now at the moment because maybe a crypto entity has challenges, right? And these are the unfortunate memories that go back to 2022 when we had similar situation, with FTX, Terra Luna, all of these guys that kind of there was a contagion happening because of issues, that some of the companies have. So this is a little bit, I wanted to kind of provide the spectrum of things, what are driving the markets now. But I agree with Melvis, I agree with Aram, I agree with you, Dudu. We are today discussing infrastructure, right? We're today discussing maybe asset allocation into products that are less volatile and more safe, I don't know if you want to call it like that, than, your highly volatile crypto market. So maybe I can pause. Would love to hear what the guys think. Would love to hear, Dudu, what you think, and kind of open up the discussion.
Yeah, definitely. I think I think we're here to talk about, we're here to put aside the chaos. Like at the end of the day, you cannot have a industry that relies on sort of boom bust cycles. And I think the degen side of crypto will always be around. There'll always be perps and prediction markets and AI agents and a lot of innovation happening on the more degen side, DeFi and all of that. But it will always be expand and contract, will always be bubbled. Whereas, the business cycle with other traditional assets, trillions of them off-chain, this looks a lot more linear, it's a lot more predictable. And sometimes we need a little bit of that in our lives, right? We can't just have chaos. So before anything, we want to take it to Melvis to kind of introduce the Canton network. Sort of, I'm very interested in kind of the breakdown between the Canton network, the foundation, what you guys do, who you guys work with, and kind of what sets apart your chain from whatever else is happening outside.
Yep. Yeah, thanks. So the Canton network is a public permissionless blockchain that was purposely built for institutional finance. We uniquely combine configurable privacy, controls, and interoperability. And with these combinations, the largest financial institutions, such as the banks like Goldman Sachs, HSBC, JP Morgan, the largest financial infrastructure providers like the DTCC, Euroclear, and in fact, the DTCC currently has over $100 trillion worth of assets that they custody and manage for different institutions. And on top of that too, NASDAQ, TradeWeb, Broadridge all use this blockchain in order to launch real-world asset tokenization platforms, assets, and also products. So one of the core biggest differentiators with Canton versus the other networks is that as opposed to being able to build and make a concerted effort, as in, am I going to build in a public permissionless blockchain, or am I going to be building on a private chain? And then with each one, you have to make deep trade-offs, in the sense that if you're building on a private chain, even though you get privacy and controls, you're missing the core value of what blockchains enable, which is interoperability, composability, because private chains, you're on an island and only your core network can use it. You can't talk to anyone else. And then if you go to a public permissionless chain, even though you get transparency and interoperability, guess what? You don't get the ability to enable core privacy or controls, because everything is publicly available for everyone to see. So there was a missing gap where we needed a blockchain to facilitate things like, if you think about the largest open network, which arguably is the internet, with a single browser, you can go to a public website like a sports website or a news website or Wikipedia. And with that same browser, you can go to your bank account. And when you log in, you have access controls. You also have the ability to not only only see your information, but you can't see my information, you can't see anyone else's information. So on the blockchain's sphere, why is it that you had to make a trade-off whenever you needed to build something? So with Canton, the way that we've launched the network and architecturally built it from the fundamental level up is that you can build in sub-transaction level privacy and controls to allow for your application to either facilitate fully public application activities like any DeFi network that we currently see on other chains, or you can enable it to have the core privacy and controls level of permissioning and configuration in order to be able to launch an application that can fit your regulatory requirements, client confidentiality, or personally, if you are an entity that wants to protect your core proprietary data and also have strong internal risk and controls parameters, you can launch this within the same network and still be able to interoperate all your applications with other private subnetworks or other public subnetworks within the same chain. So that is Canton at a high level, public permissionless chain, but allows the builders and asset issuers and product launchers to be able to enable privacy, controls, and interoperability. I'll stop there, and then more than happy to jump into some of the use cases we've seen, some of the partners we have on the network. But it's very, very unique and different. And I can also talk about the differentiation between our privacy and others as well. More than happy to jump into all this.
Yeah, it's a great one. I mean, the browser example is excellent. Like the fact that you can kind of toggle on and off whether you want to access proprietary private stuff or whether you want to interact with public dApps. I think it's super important. And that trade-off between privacy, between interoperability, I think it's a great way to kind of solve that with Canton. So what are some of the products that are exciting you on Canton at the moment?
Yeah, so today, some of the core use case verticals have been around payments with privacy. End of the day, if you think about it, who wants to do payroll where everyone sees how much is coming into my wallet every single week? If you're a business, you don't want to do B2B vendor payments for everyone to see how much you're paying one vendor versus the other. And then in addition to the payment side too, if I'm a company and I need to do treasury management or do liquidity management or even do cash management, I don't want my competitors or every single person that knows my business to be able to track everything that I do. Or also, for example, if I'm in a core publicly traded company, I don't want the whole world knowing my financials until I'm ready to report it every quarter, right? So payments is one. Number two is collateral mobility. Within crypto or even other markets that are in the ecosystem, whenever you need to do, for example, variation margining to protect the derivative trading that you're doing across different markets, you don't want, whenever you're sending collateral assets such as Bitcoin, stable coins, or ETH in order to top up your risk positions, for people to be able to see it, front run it, and force liquidate you, right? So collateral mobility is another vertical. And then lastly, the way that Canton is structured, you can launch real world asset tokenization platforms or even application and assets and be able to build in the full workflow life cycling of that asset. So from atomically, so from the issuance of the asset, the distribution, the trading, the settlement, atomic settlement, all the way to collateral management, and also the life cycling activities themselves. All of this can be built atomically on Canton with the privacy preserving features that you would like to see. So these are some of the core aspects of what we do that happen on the across crypto and TradFi. But the beauty about Canton as well is that we are also seeing a proliferation of some of the DeFi activities coming to Canton as well. So we're seeing people come in to build DEXs, perps, prediction markets, all the way to vaults and lending and borrowing. And the beauty is that they can launch these applications to be fully publicly and transparent, or also have components of privacy involved with it to expand upon what Canton can bring, or stay within the full public permissionless verticals as they want to. So it gives you that flexibility that I talked about earlier. So with a browser, you can go to public or private websites and apps. And then on Canton, with your wallet or your node, you can go to private or public applications on a network as well.
Yeah, I love it. I think it's important to have that kind of opt-in privacy, because privacy, like, people think of privacy, they'll think about like Zcash, or I mean that's also opt-in, but or like mixes or something like shady. Like privacy is something that it's a toggle essentially. Like you don't need necessarily a private chain, because some of the stuff you're happy to do publicly. You're happy to have pseudonymous wallets like prediction markets or whatever. But when you're moving large sums of money, or when you're doing payments, or when you're doing more revealing financial transactions, that's when you want the privacy. And some institutions have to have the privacy. They have the fiduciary duty to have that privacy.
And that's one thing I wanted to highlight too, is that the big difference between the type of privacy that we use at Canton versus ZK is that with zero knowledge, that's more about anonymity, versus on Canton, we're doing privacy at a need to know basis. So for example, with heavily regulated institutions, they can't fully accept something that's fully anonymized, because you still have to do your regulatory requirement attestations, and also potentially do reporting to different types of internal partners or even external partners themselves. With ZK, it's a black box, right? You get your output, and then so you can't really track or audit that data per se, right? So with Canton, our privacy is on a need-to-know basis. You can still audit the data, and you can have selective disclosures. So, for example, I can make a transaction with Dudu, and then from there, I can enable my lawyer to see it whenever he or she needs to see, my regulator to see what they need to see, my accountant and my internal teams to see what they need to see, and not see the full transaction if they're not party to it, right? So that's a big thing I wanted to highlight, is that there's a difference between anonymity and privacy on a need-to-know basis, which is what Canton facilitates. A granular level of really codifying the configurable privacy or selective privacy that you may need to abide by, depending on your application, your users, your regulators, your jurisdiction, all of that.
Epic. I got that. That was very helpful. Thank you. But Aram has an interesting question. When we're chatting a little bit about the show, Aram went deep into detective mode, and he found something that requires explanation because it's very interesting. Like I think it can reveal a lot about how RWA work behind the scenes. And now we've gotten past the introduction and the hellos. Now we get to the meat of the meat of the show, and that is for someone watching at home that is in the RWA tokenization business, how to do it right. What are some of the playbooks, some of the tips, some of the skills that they can adapt in order to get this right. And I think what Aram has to ask now can reveal a lot about that, because we're going to go behind the scenes into the numbers right now.
Yep.
So without further ado, I want to kick it to Aram for his question.
Yeah, thanks. So I've been following the Canton Network's journey for a while. I've been following what Yuval has been doing, and I think Canton has been in the building mode for probably more than a decade. Correct me if I'm wrong. But I think most of the crypto native region population, they pretty much haven't heard of Canton Network until recently, when I think in November, the CC, which is the Canton coin, it started trading. And they're like, oh, okay, we have a new chain. It's got 6 billion market cap. Wait a second, what is that about? That's when they started looking into that, right? And then the second thing they look at is they go to rwa.xyz, which is this famous dashboard website where you can see all the tokenized assets. And there have been a lot of conversations that non-stable coin RWAs are going to be the future. There have been a lot of reports saying that this number is going to go to trillions by 2030. So a lot of people, what they do is they go to rwa.xyz, and on that website, you essentially have two different classes for real world assets on chain, right? So the first class, they call it distributed asset value. And basically their explanation is that it's essentially the kind of tokens representing real world assets where investors can directly manage, transfer through their custodians or their wallets, etc. It's sort of like easy to think like a permissionless way. And these are the assets that you have on Ethereum. Ethereum is dominating the space. It's got like 50+%, etc. Right? But recently they have added this new category, and this new category is called represented asset value. And the way they explain it, it's some sort of like a record-keeping layer, and essentially they say you can't move these things on chain, and sort of something like a permission layer, right? And if you look into this represented asset category, like 94% of all these assets are on Canton Network. And then if you dig a little deeper, you see that there's one entity behind that, which is called Broadridge DLR. And it's like 350 billion, and that's like more than 10 times more what we have in the first category, which is like 24 billion. And this seems to be repos or repurchase agreements. So I want you to, maybe in layman's language, just explain what is this represented asset value category and what's this Broadridge, and is this 350 billion number what represents all of the assets that Canton Network has tokenized, or is this the only thing that's publicly available? Because you've talked about privacy, and there's a lot more that's tokenized on Canton, but we don't have data about that.
Yep. So one thing I want to highlight is that with the advent of crypto and the development and growth of it, there've been a lot of like tribalism and like little subsects that want to just see their own network or their own assets proliferate and grow without stepping back and looking at what blockchain enables us to do at a broader level, right? At the end of the day, most of the activities within crypto are financial in nature, right? But then we sometimes think too micro in thinking about just like what's happening within crypto, and let's just talk about the representation of what crypto is, without taking a step back to identify that at the end of the day, what the core goal of everything we're doing is to be able to provide improvements to the broader real world, right? Right now, crypto is what, $3 trillion worth of a market cap industry. But then if you zoom out, traditional markets is over 500 trillion. So the tech itself does enable a lot of capital efficiencies and operational efficiencies across different industries, especially traditional financial markets. So with Canton, as I mentioned earlier, we allow institutions to be able to launch applications with the ability to enable some parts to be public, enable some parts to be private. And in doing so, with what you see on RWA.XYZ, Broadridge is one partner that's been able to engage with a tracking website like RWA.XYZ in order to enable them to track the repurchase agreement transactions that they do on a daily basis. To zoom out again, within the repo market, it's a 10 trillion a day market, right? By Canton doing 350 billion of it per day, that's less than 5% of that market. And so
the 350 billion is per day. It's volume. It's not TVL. It's not like
it's per day volume.
Volume. That is even crazier. That's like
exactly. So that's the thing that we think too micro, for example, in our industry too much, in the sense that we need to start thinking and accepting broadly what we can do, and accept when others are using this tech in order to illustrate or perform these activities, versus always having to fight. It has to be fully crypto decentralized. Some industries just can't do that. Regulated markets cannot allow any wallet to just connect and move assets. You have to go through some core requirements because they are heavily regulated. So Broadridge is doing intraday repo, sponsored repo, bilateral repo, and different types of repo transactions. And repos are equivalent to, let's say, staking, right? People lend out a treasury asset with a built-in contract to then purchase it back after the time frame that they lent it for. So they lend it and they borrow cash or cash equivalents for it. And this is what they're doing, $350 billion per day of repo transactions on Canton. And this is on the digital ledger. So this is all on chain as well. And so this is one partner. And then outside of this, Canton also facilitates transactions for private equity, private credit. We have insurance products as well, life insurance and annuities as well. And then also one of the largest private equity fund feeders is also on Canton. So as time goes on and they all start working directly, concertedly with the RWXYZ and other reporting website, that 350 billion per day number is going to shoot up the roof. So it's all there. It's just that we need to think much more globally as well. And if you think about it too, even JP Morgan with Connexus, they've been doing a lot of demand deposit activities as well over time. So, yeah.
Got it. So do you have a number that you can share, that what's the total value of assets tokenized on across all Canton networks?
Oh, so right now, well, on a per day, that's daily volume with Broadridge, but then there's about $6 trillion worth of assets on Canton today.
Okay. So it's already in trillions, not hundreds of billions. Okay.
Yeah, it's in trillions. Yeah.
Okay. And just one clarification, because I'm trying to put myself in crypto native shoes and try to understand the difference. So I understand that Bitcoin or Ethereum, they're not securities, right? So that's why everybody can trade them in a permissionless manner. But in the US, we have securities laws and you have to be compliant. And securities laws basically say two anonymous people cannot send a security from one person to another. There has to be some sort of KYC and you have to comply with certain laws. And that is why on Canton Network, the Canton Network is built in a way that will allow institutions to do that. But then the difference is that if you can't basically trade in a permissionless manner, and that's why you have these two different ways to classify assets. One is the ones that I talked about. One is distributed asset value category. The other one is the represented one. Is that a good way to simplify?
No, so I would say at the end of the day, with securities laws, there are laws around those underlying assets that are being represented on a blockchain. Mm-hmm. So at the end of the day, those underlying legal contracts need to also be programmed within a smart contract. So at the end of the day, if it says that you and I need to KYC to the broker in order to buy this specific security, those same languages would be built into the smart contract. So when we connect our wallets, it does the KYC AML background checks to allow us to engage in the transaction. So that will still have to be identified the way that it is. Versus at the end of the day, if it's not a security itself, yes, 100%, you can seamlessly move it back and forth without needing to KYC AML.
Okay.
The beauty about Canton is that the asset issuer can basically can literally program the full rights and obligations and claims into the smart contract to facilitate the ability for us to be able to compose these transactions and still meet the underlying granular legal requirements that may be available for that specific asset.
Thanks, Melvis. I think I get this, like the scale now. It's way beyond what I thought half an hour ago. You kind of, these are $1 trillion markets, $1 trillion daily volume, and it's already a big chunk of that. If you take 350 billion out of 10 trillion, that's about 3% already. So that's already kind of a decent, dent, and it's just the potential is just enormous.
And then just to add on to that enormity is also like the DTCC. We did some live transaction activities with them in October and also last summer, where they digitally natively issued a US Treasury and was able to trade fully on chain against USDC as well. At the end of the day, Treasury markets are the underlying asset that all these stable coins literally hold to attest for the assets that they hold, right? So by being able to work on bringing assets at a DTCC, which currently houses over $100 trillion worth of treasuries, corporate bonds, equities, ETFs, municipal bonds, and all those slowly come on chain, like the magnitude of what that can transform, not just for crypto native, for example, stable coins like Circle, USDC, USDT. End of the day, they have to buy and create and redeem and mint new stable coins from these treasury assets. So issuing these will basically be able to improve the capital efficiencies, operational efficiencies. And then from there, most of these other assets that are coming on chain, like, for example, tokenized equities, eventually you'll be able to compose a transaction by using your equities that's sitting at your broker in order to leverage it and get assets, an investment into a private equity company or something. But today you can't really do that if you are an individual or if you are a small broker. But being able to add these composable nature of workflows will just improve the full life cycling and capital flows around 24/7 markets, instant or real-time settlements, and then the composability side. So being able to eventually use it in DeFi or other lending and trading markets is going to be quite powerful.
Right. And one more thing I want to ask, because I think a lot of the retail listeners might be interested in this. So you've mentioned that Canton's primary goal and users are currently institutions which are regulated, right? Mm-hmm. But I'm thinking, if I'm a crypto native, and let's say I have some tokenized equities, I have some tokenized Tesla, and I want to do simple things which I would do on Ethereum. I want to borrow some stable coins against that. Will there be a possibility on a certain Canton network to go to something like Aave and then
So as I mentioned, we're a public permissionless blockchain, so it's open source code. People are building these same primitives, DEXs, perps, lending and borrowing, vaults, assets, and even prediction markets as well. So many of the builders are actually excited to launch on Canton, because instead of me going to Ethereum or Solana and I'll be like the 100th DEX, 100th XYZ protocol launching, on Canton is so early that these builders are seeing the opportunity to come and launch those similar types of applications on Canton, but then capture the ability to expand upon not just retail, but also capture institutions, or build those same assets, or build those same products and assets, but also add the privacy layer on top of that. And then in terms of the builder phase too, a beauty about Canton too is that it's not a VC chain. We did no pre-mine, pre-allocations, or pre-sales. It was fair launch token. And every single token out there was mined by someone that added utility to the network. So from the validators to the super validators to the applications, as you provide utility, you mine Canton coin. On top of that too, we through the 10 years of research and development, we got to gain some lessons from the other chains that launched before us to understand and structure tokenomics, so that at the end of the day, we really believe that the viability of a network comes from the applications that actually launch and provide the utility. Because at the end of the day, running a server to validate or mine tokens is something that's pretty commoditized, but the true growth comes from the apps that launch. So at the end of the day, in Ethereum, like Aave, Uniswap, even the USDT, USDC, they got no ETH for the value that it brought to Ethereum network. On Canton, if you launch an asset or launch an application and you're providing 5-10% of transaction fees and rewards for network, you as application owner also mines that amount of coins. It's not just going to only the infrastructure providers. So over 50% or predominance of future mineable Canton coin is for the builders who come and launch products and applications, because we feel that you are putting in the blood, sweat, and tears to sustain this network. So you should be rewarded, not just the infrastructure providers. So that's incentives are very aligned on the network as well. So DeFi builders and everything has been, they're coming. We have a bunch of projects launching in this quarter.
Yeah. And another interesting thing I've noticed on Canton, which is very different from what you have on other chains, is that, and I want to understand why it's built this way, is that you pay the fees in the CC, which is Canton coin, but actually it's quoted in USD. Yep. So you're kind of essentially paying in CC equivalent to a certain USD amount, which is not the case on ETH. For example, during, I don't know, like if there's network is congested, the fees can just spike. Why is that? Was the decision made to build it this way? Is it because institutions
also like institution, you need the predictability for like institutions to be able to basically model out what it would take for them to launch an application and potentially what it would look like for them to facilitate that. Because the amount of volatility that happens across different networks due to the spikes in price activity is something that you just cannot sustain if you are an institution, if you need to be able to have to structure what the predictable fees may be or predictable rewards you may be able to get. And so that's why. Another key differentiator about Canton 2 is that we have a burn mint equilibrium as well. All transaction fees are burned, and then as utilities added to the network, new Canton coin is mined. And then over time, it's going to go into an equilibrium level where $2.5 billion Canton coin will be mined or burned per year. So once that meets out, when basically the Canton coin price itself is also matching with the overall utility of the network.
Yeah, I think that's a great segue into the Canton coin. I think that was super important to hear. I do want to get to Anton and ask him about gold tokenization as well. But first, Melvis, like from your experience, you're obviously dealing with a different beast in these $100 billion repo companies, the biggest of the biggest financial institution. But what kind of tip, what kind of trick could you give? Could you suggest any kind of issuer, whether they're traditional real estate guys coming to issue a token, for $5 million, or whether they're a massive bank coming to issue put $100 billion worth of repo on the blockchain? So what kind of tips and suggestions would you have for them?
Yeah, so with us and the way that we've been able to work well with the institutions, that is first trying to understand what the core challenge or opportunity that they're looking to accomplish. And then the beauty about Canton is that it's structured from a ground level up in order to allow you to have the sub-transaction level controls and privacy and overall interoperability level that you may need without needing to bolt on other solutions to facilitate it. So upon learning about what the core needs and potential opportunities are, the ecosystem already has over 600 different partners, from the infrastructure providers, different asset issuers, product issuers, and then eventually, obviously, the users themselves as well. So the Canton Foundation, which is the steward of everything Canton related with regards to the transparency, neutrality, and open development and governance of the network, is here to help facilitate the growth of the ecosystem. So yeah, I'm here as a resource to help you guys navigate the Canton ecosystem, either through the partnerships we have or even opportunities around the network. And we're going to have a Canton Development Fund launch later this quarter to help sustain and facilitate people coming onto the network as well.
That's cool. I think it's always great to see, support for builders, and it's really nice to see that you've embraced like both the the Web3 native side of like grants and encouraging open source development and dApps, and also being able to have flip the switch into the institutional hat, wear the institutional hat, and facilitate lots of transaction volume for institutions that have different kind of requirements. But I want to kind of get to Anton we got a few more minutes left. We've had an insane discussion up to now. Aram and I went deep into how the Canton network works, how the token works, what represented value means, and we've discovered that it means that other dApps that are using Canton are actually running it through on their own sort of compartment, and in this case, it's repo transaction for $350 billion, and $6 trillion is the final amount that Melvis gave over here. So if you're just tuning in, you've missed a lot of big numbers. And speaking about big numbers, gold is obviously hitting 5K before Ethereum did, adding $1 trillion to the market cap every hour. And our friend over here just launched, just facilitated a gold token in the UAE with some yield. I'm very curious about that because the section of RWAs that has increased the most since the beginning of the year, it's only been about 6 weeks, is tokenized commodities, right? And that's obviously a function of the price going parabolic, gold, silver, platinum, everything. So I'm very curious, Anton, as to how you guys got it done. What's it like launching it specifically in Dubai? Like, Dubai seems to be ahead of the curve when it comes to these things. So yeah, I mean, anything you can and will share with us will be much appreciated.
Yeah, I'll try to share in a few minutes. And also just want to say, fascinating what Melvis was actually describing. So remember in my hedge fund days, we were a keen participant in the repo market, either to pledge collateral to get credit line against it, or actually when you wanted to trade short or something of that sort, we actually borrow in the repo market. So this is a very, very critical part of the infrastructure. But I think most people, especially if you're not part of the asset management hedge fund industry, maybe have never touched repo market, or it's unlikely that you will touch it directly, right? But now going back to UAE, I mean, look, they're really UAE is really an amazing place for tokenization of real world assets. I think a global leader, obviously in a very different context than what Canton network is doing, which I would put more into the Wall Street category. So this is kind of how we place it. But UAE is very exciting when it comes actually really to two asset classes, and that's real estate and commodities. I mean, commodities because UAE is a commodities hub. It's one of the key jurisdictions or countries in the world for trade of commodities. And you kind of hinted at that, gold, silver, but not only that, I mean, oil as well. I mean, I'm sure you're aware of it. And the second thing is, asset class, I think the most exciting in the world, it's, real estate in Dubai, I think everybody that you talk to wants to somehow get exposure to that. And this is where the tokenization in the UAE has been focused. So far away from this repo market, kind of Wall Street type transactions, but more kind of something that people can touch and kind of relate to, right? And maybe like a few sentences. Obviously, I think you are might aware of the real estate tokenization that UAE has done in collaboration with Dubai Land Department, VARA, which is the local Dubai regulator, and some other amazing stakeholders, which I'll just mention very quickly. Pripco, Control Alt, Zenbank, and our friends from RippleX. Basically, what happened there, this stakeholder has tokenized a couple of real estates, right? And tokens were sold out, through these regulated platforms within minutes, right? So huge demand for real estate has also shown in practice to work in tokenized form. And we are very, very excited kind of what is going to happen there in the future. But for anybody that's, listening to us, you have to understand this is a staged approach. The regulators and the local authorities want to see success stories on a limited scale before this, flies to the moon. And on the commodity side, kind of as I hinted at, there are some very, very big players here in the country and in the region involved in trade of gold and silver. And this is irrespective of the price movement that obviously went up and then down a lot, but also, commodity trading of oil. And there we had the opportunity to work with one of the biggest players here in the country and in the region who wanted to understand how they can actually tokenize their gold supply. And I was very glad that as a part of the RWA Labs and Neos Legal, who was a legal partner, we provided turnkey solution how this enterprise can tokenize their gold supply, receive clear benefits, right, clear advantages from this process, and also enable a distribution at a better cost with a lower size and with a better scale. So this is a little bit kind of what I want to share. I want to also give an opportunity to Aram as well if he wants to share something. But in a nutshell, UAE leader globally in tokenization. In particular, the focus is commodities and real estate. You're muted, or I can't hear you.
Yeah, I think you're still muted. Okay, you're.
Yeah, so commodities and real estate in Dubai on Canton network. That's the Cluedo game, to kind of wrap it up. I want to go to a lightning round. I have 3 questions, quick answers from each of you, and then we will end the webinar on a high. So the first question is one Web3 project, not your own, that you think is going to surprise everyone with this year. And I'll start with Anton.
Let me just unmute myself. Can you hear me? Okay. So look, I know a lot of people are going to listen to this. I know a lot of people will then, I'm not giving financial advices here, but if I would have to pick one, I'll go with the old, I'll go with the classic, I'll go with the eternal, so Bitcoin. And maybe also to provide a bit of context, I was fortunate to attend Satoshi Roundtable a few weeks ago, which I'm sure a few insiders know what I just said. There's a lot of exciting developments that are happening directly on the blockchain of Bitcoin. There's a lot of institutional demand for solutions directly on the blockchain of Bitcoin. For everybody, who know a bit about blockchain of Bitcoin, they know it's not made actually for decentralized applications or any kind of smart contract development, but there's some very, very exciting things happening there. I think it's a great opportunity, and also because by size, by TVL, I don't know how you want to call it, Bitcoin is by far the largest, and it provides you a decentralized infrastructure, but the one that can support an institutional use case, obviously very different than what Melvis was talking about, but still, I think a very, very valuable one. So hopefully in the future, we have a decentralized exchange on the blockchain of Bitcoin. We have a lending and borrowing pool on a blockchain of Bitcoin. Launchpads, I don't know how I want to call it. I think that's something that's very exciting for me. So yeah, I pick Bitcoin,
Nice. I'm happy that it's nice to hear some bullish news on BTC-Fi. Like I was very deep in that rabbit hole for 2 years. Obviously, it started off with like ordinals and runes, and there was like a lot of trading of memes and cat pictures and JPEGs. But obviously, that's not what Bitcoin is good for. Like Bitcoin is not a casino. Bitcoin is a ledger of highest reputation in the world, and that requires a different type of asset class. So, I would love to see what you explained, like the DEXs, the tokenized assets on BTC. I've become a little skeptical in my old age, so I have to pause. I'm not sure exactly how fast we'll get, but I love that answer. Bitcoin Well, good. Aram, what about you? What projects do you think will surprise us this year?
Yeah, I know you and Anton, you guys love Bitcoin, but I guess I'm a little different. I don't want to call myself ETH Maxi, but I'll pick ETH. And the reason is because I believe that Ethereum is finally getting on the right path. So if you look, I won't go into too many details. There have been a lot of development, but there's like two key things for me. Well, the first one is that Ethereum formally announced that they are working on the quantum proofing the chain essentially. And we don't really know when the quantum threat will become real, but they have formally announced there's a team, and Ethereum is more agile. And I think Bitcoin is a little bit moving a little too slowly. So that's the first reason. The second reason is because I think Ethereum is finally getting on the right path to scaling. So I think since 2020, Vitalik has announced that the L2 was the path for Ethereum to scale. Now they are kind of walking back from that. And they are saying we're going to scale the L1, and I think that's the right way to go about it. And they're going to use the ZK-VM to do that. And the reason is because technology has matured faster than they thought it would. So those are the two key developments. And of course, I know a lot of people from the Ethereum Foundation. I've met them personally. I know that they're great builders, and throughout my conversations with them last year and this year, like I'm really bullish. I know it's not reflected in the price, and sometimes it can be taken as a contrarian view, but I'm hugely bullish on Ethereum. I think it's going to be the programmable permissionless layer for all sorts of digital assets.
Thanks. Let's see who comes out on top. For me, I'm going to say Canton, because Melvis can't say Canton. And these numbers really blew me off my feet. I think people aren't aware of the scope of like where it's gotten to yet. Like, you know, until Aram showed me that, and that's a new figure that they added on RWA.xyz. So, you know, as we say, if you can't track it, it's not real. And you guys are really bringing the numbers. Ooh, I got something stuck in my throat, so I'll clear that up and I'll get to Melvis. What are you going to be surprised by in 2026?
Yeah, for me, it's not a specific asset, but like a vertical more so. Like I think the prediction markets vertical of apps that are launching are quite interesting, considering like expansion from Kalshi, a poly market, and then from their newer primitives around that, potentially adding leverage, and on top of that too, potentially borrow lending components around it. Could be interesting to see people exploring in this vertical of prediction markets. So that is the segment that I'll say is quite interesting to see it proliferate and grow within the blockchain ecosystem. And on Canton, there's some that are building with privacy preserving solutions around it as well. And so quite interesting to see how that gets proliferated. Considering end of the day, I know Anton talked about commodities, but I would say at the end of the day, the greatest commodity out there is information. So being able to basically use information to influence the different markets that can come on prediction markets is quite fascinating.
Yeah, I mean, I'm very much looking into prediction markets. Like the fact that Polymarket API is public and free, I don't think that's going to be a thing for a very long time. And like just kind of trying to see what I can build, and trying to see like what kind of a hedging, what kind of arbitrage you can do between prediction market and other type of markets. Because prediction market, you know, like I had the idea the other day of like kind of looking for concert tickets or sports tickets based on information asymmetries on prediction markets. So you have like a market that is, you know, Web2 or like real world market, and then you have the prediction markets which are pricing risk in a different way. So I'm very bullish on that. And the last round robin lightning round question: what is the biggest right now? You know, I had a different question, but we're in the depths of a crash, volatile destruction, blood on the street. So I want to end on a positive note. What do you think is the biggest catalyst in 2026 that we should look forward to that can maybe turn the chart upside down? Can start with Melvis, and then we'll go. Oh, Anton as well. Go for it, sir.
Look, I'll give you a little bit of perspective here from the UAE. The ecosystem here has been executing, for many years now. Digital assets, AI, but also other technologies are as a top priority to the leadership of the country. And, what will turn this chart upside down, as you say it, is consistency. Consistency, and just keep on building. Keep on building in 2026. Thanks, guys.
Yeah, I like it. Just heads down, grind, and eventually the tide turns. For me, I want to see. I think the catalyst here is like the world is going into an agentic direction. Like soon, the robots are going to take over, and like they're going to dominate everything. And the agentic economy is not going to run on Swift and be closed from Monday to Friday and Super Bowl Sunday, and also on bank holidays and Labor Days, and it's closed at 5, and you have to wait 2 to 4 business days for settlement. Like, it's not going to work like that. The agentic economy is going to be fast, peer-to-peer, or anywhere in the world. There's going to be, I think, toggle on-off privacy, like what Canton provide. So I definitely think, and these trends on it's not something 10 years time. I'm not talking to you. This is something that's accelerating every day and getting faster. So I'm definitely looking to, AI agents using money and doing so on chain, and that's going to kind of, send another tick in stablecoin volume. Maybe Anton will start to say that stablecoins are for more than just market makers to kind of move money around. Maybe we'll see some real adoption from the agents. Whatever happens, the agents, I think up to now, AI crypto has been sort of a gimmick, and I see the next wave being a lot more than a gimmick. We have X402 standard for USDC transfers. I think we'll see more standard, more innovation on the agentic economy happening on chain. And that's something that I can see. But otherwise, I've given up on Trump. I have a post coming tomorrow. I think he's full of shit when it comes to crypto. Like, I've just given up on I think he did well by himself. He made a lot of money for his family, but it's a lot of PR and very little substance. So I'm not waiting for politicians to come save my bags anymore. I'm going to work for my bag, work to build, as you said, consistency, and to kind of show that this agentic economy, this exponential curve, it belongs on chain for many different reasons. Aram, what about you? What do you think is the biggest catalyst for 2026?
I think it's going to be the RWA. I mean, Canton Network, we've already talked, Melvis mentioned, they have 6 trillion of assets tokenized. And I hope that we're going to have tens of trillions of dollars of assets on chain. And I think even if you took some of the biggest institutions now, like tokenization of assets is some of their biggest priorities. And I believe it's not like Web3 is going to replace TradFi. It's just that TradFi is really going to move on blockchain. It's going to become much faster, much more efficient. And this is the future. I'm hugely bullish on this category. And I think we're going to go a lot bigger than this. And we haven't even tapped into. We have tapped into just a small percentage. There is way more room to grow.
Awesome. Last but not least, Melvis. Before, our respect for Melvis, who came out here during his end. It's night time in Hong Kong, and Melvis, nevertheless, he comes up, he shows up, and he gives a Super Bowl level performance with big numbers and big confidence and big ideas. So thank you for coming on. What is your catalyst for 2026?
Yeah, I agree with Aram in the sense that, like, end of the day, and you mentioned this at the beginning, that within the crypto ecosystem, it's just been us moving assets and value around. But then the unlock is enabling the real world asset tokenization vertical to come in. And within that, I would say, like, now having strong core infrastructure and assets that have real value around utility and financial activities within it come to market are going to be the thing to unlock this, because there's been a lot of leverage that went into a bunch of fluff in our ecosystem. and there's nothing behind or holding those different assets. For example, like there's so many chains out there that are sitting on billions, but then you look at the transaction value per day or per month or even per year, it's less than $10,000, right? So being able to now identify strong core assets or products that have strong real value, and the big unlock that we have in front of us is the traditional assets coming into crypto. And it's not just crypto, it's not like idea about crypto replacing it, but basically helping to augment and provide better capital efficiencies and operational efficiencies back and forth. So that's it.
Yeah, I'd love it. I think everyone's looking for like the bang and the big fancy depth and innovation, and it's like the real money is in the plumbing, in making the boring things that 1% more, that 10% more efficient and more cheap. So I'm excited to see that play out also 2026.
That's actually a funny thing, because with Canton, it's been over 10 years in the build out, and now today people are like, oh, where did it come from? But that's just a concerted growth and effort that
Canton's been built for 10 years in the making.
Yeah. The team that built Canton is called Digital Asset. It was started in 2014 by two core members at DRW Cumberland. And also another co-founder was actually one of the researchers behind Zero Knowledge. So
okay.
We do know Zero Knowledge, but then chose to go privacy with need to know basis, because that is what's needed for the big unlock for institutions. So yeah. And then we launched Mainnet in 2024, and then launched the token on centralized exchanges last November. So we didn't want to come to market the way that many have done, where with just a white paper, just a tokenomics, and then no use cases and no tech, launch a token, right? For us, we made sure that we had the pilots done, production assets and end products in place, partnerships in place. So when people are seeing Goldman, JP Morgan and stuff, it's not done overnight. It's been years of work and making sure everything's mature before it came to market.
Wow, that's I mean, that's what I was telling a friend the other day. Like you want to build technology that is like evergreen, and then when the narrative arrives, like 2024 was a time when I was at INX in 2023, and that's kind of when the RWA buzzword, like the niche, just kind of started to take off. So 2024, you guys were right on time, but you spent all this time before perfecting key technology. It's just about using the wave to learn how to package and bring that to market. So kudos to you guys. And kudos to Anton and Aram. Always a pleasure, gentlemen. This won't be the first time, but not the last time this year. We will be coming at you live with a lot more interesting conversation on LinkedIn. We were live on Twitter and YouTube as well. Thank you guys for joining. Melvis, enjoy the conference. Let us know how it goes. Let us know what people are feeling there. Aram, Anton, I'll see you guys on the timeline. And peace to everyone. Thank you to everyone for tuning in. We had a great turnout today. Cheers.
Thank you.